Hey, good morning, everyone. Marty Missouri here, Wednesday, May 18th, 2022, with your midweek market update. It's about an hour and a half after the open, and as I speak, the S&P 500 is down, call it 1.9%, so pretty decent sell-off this morning, and the Nasdaq 100 is down 2.17%. Blame it on news from Target this morning, which compounded news from Walmart yesterday. In both cases, their margins are getting severely squeezed by rising input costs. It's almost surprising that the market seems so surprised by that news. That should be obvious. The question is, to what degree can businesses pass these higher costs onto the consumer? And some of the economic data, as we've been reporting here of late, and as I reported about the housing market this morning, is slowing down notably, and I think that's causing some consternation. So these somewhat rosy profit outlooks for this year that many on Wall Street have continued to present are getting severely called into question right now. And I've also maintained that if indeed a backdrop of slowing data inspires the Fed to soften up on its tightening plans, well, then I think that will inspire a noticeable rally in equities, at least initially. If the ultimate outcome is recession, then I think it's very problematic for stock prices. So here's that 60-day, 60-minute chart. So we'll start in the short term, take you through the long term, and call it a morning. So we had that very compelling falling wedge pattern with your bullish divergences. We had the breakout with momentum. All made sense again, looking at how things are playing out and thinking about other factors that we've talked about. That 4,300 makes a lot of sense to me as a place where this market stalls out again. We came up right to this line right here and found resistance, busted through that pretty well, tested it a couple times, but we're failing that today. It's falling right up against what would be support right here. If it breaks through that, then we're going to be right down here at this bottom. It breaks through that, you can forget that notion that we get this snapback rally right here currently. Of course, that all remains to be seen. Obviously, right now, this is not nearly the positive look that I've been showing you the last few sessions. On the one-year daily chart, we still do have a positive divergence here on the RSI, and we had, as of going into today, we had a MACD that was looking to give us a short-term signal. However, when we take a look at the pattern that's developing up here, we had this bear flag pattern right here. We take the flagpole, which gives us our next price target. And sure enough, that's right where the market started to bottom, consolidated a bit right here, kind of creates another flag for us. And if we take that down, and I can just estimate that that's about right there. That looks like about the length of that flagpole. Sure enough, that's right where we bottom. Now, what I was anticipating was that we wouldn't, have your flag pattern develop once again right here, that we would actually continue our ascent, in choppy fashion, and that's what's happening right there, and and test this 4,300 level once again. Now, with today's breakdown in the market, right, if indeed it's just going to continue to flag lower, then we take the length of the flagpole, and that would take us right down here, to around that 3,800 mark. And as you recall from the other day when we looked at retracement levels, that would be a key 38.2 retracement of the rally from the COVID low. And that would be an area I think that the market would begin to try to see if it can form a bottom. Ultimately, as I'll show you once again here, barring any recession, we're thinking closer to 3,400 or 3,500 on the S&P before this thing plays itself out. So once again, on the weekly chart, really negative look on the momentum indicators. Just looking at the price action, we had that, what I'll call a bear flag. The flag is a little too big for a typical bear flag, but anyway, we'll call it that. And if you take this price target right here to 4,000, which is right where that landed, and then if we had this kind of consolidating action, you can see what we're looking at right here. That would snap back right to that 4,300 mark. If we recover from today and this snapback rally catches steam again, then that's that area where we think the market's going to run into some serious trouble. Beyond that, our 30-year analysis of trends and so forth on the weekly chart says again that we're at that 34.78 here, and yesterday in the blog I said 34.50. Makes a lot of sense to us as a place to begin really thinking about putting some cash to work in this market longer term. So again, folks, lots to play out. Technically, it's very interesting. Going to be a very choppy, very volatile market. Obviously, we can go in either direction in a big way right here. And then to finish up, let's just look at the we'll look at a 10-year monthly chart. And this is just the same thing I keep showing you over and over again. This sell signal on the MACD, when you go back and test that over the past 30 years or so, says that if things play out as they have, that 50-month moving average right at that 34.50 mark is where things should bottom. And I want to say it again, barring a recession in the meantime. A recession in the meantime, we are absolutely going to be anticipating a further decline well beyond this level right here. So recession is not our base case at the moment. Very open to the notion. Certainly our assessment is that growth is slowing, and looking at this week's data, I suspect our PW index is going to take another notch lower, but not give us that recession signal just yet. I'll leave it there. Again, rough market today. If we're right in our assessment here, we expect a notably rougher market before this thing plays out. But I do expect we're going to see some strong snapback rallies that are going to have people thinking that the worst is over. But that's not our base case just yet. Thank you as always for watching and listening. Talk to you again soon. Take care. Bye-bye.